This is FarmDKS with FarmDCapital.com, the Trading Doggy Style newsletter on Substack. I get a lot of questions about my trading style and how I pull off some of the trades that I do, so I wanted to give a brief overview of my approach. My approach is a blend of different trading styles. I have taken aspects of different trading strategies and put them together in a way which I feel is synergistic. I combine what I call supply and demand at price, which may be a bit different from how some other traders see supply and demand. I combine that with volume profile, balance ranges, price action, market profile, market structure, and some, but frankly not much, traditional technical analysis. All of these I look at across multiple time frames. I'm specifically looking for what I call cascading trade setups. This is a setup which allows for an initial entry to be managed with super tight risk, but has the potential to trigger a secondary setup, which then has the potential to trigger a third setup, and so on. I'm looking for very large trades that have a very tight initial risk, but high probability of working. If the initial setup works, but doesn't trigger the secondary setup, great. I got a nice scalp that had a high probability of working. However, if the secondary setup is triggered, my reward to risk of the trade explodes. I start with an example of a trade idea from the July 28, 2024 weekly plan that played out on Thursday, August 1st for a total of up to 1,300 handles if runners were held into Friday. This setup was ironically identical to the prior week's ES short setup in the 5620s. So we were monitoring this 19,650 to 690 range, which was sitting just below 730, which was a key spot. 730 area represented the bottom of a prior balance range with strong supply left behind it. You can see if we just look left here. Look at all of this price action sitting above 730. So all of these longs, any who remain, are trapped. So 650 to 690 was a low volume node, just from volume profile, that was created because of the rapid and powerful movement of price down through 730 from above initially. As an added bonus, we also had an anchored VWAP, anchored to the beginning of this recent sell impulse, sitting right at the same spot. So the chances of seeing a sell side reaction here were very, very high. So again, we've seen that price had traded above 730 for quite some time with a whole lot of buyers who now got pretty significantly underwater. And as price rallies towards their break even, they have a decision to make and a choice to make, if they want to go ahead and take a small loss after, having a very large unrealized loss, or, risk holding on, hoping this reclaims, and risking the potential for it to go much lower. So what happens? As price rallies, it remains trapped in the 650 to 690 range after not quite sniffing 730. So this inability from buyers to get through this range leaves, again, all of these trapped longs above 730. Nearing their break even, they have to make that choice. Many of them choose to sell. This selling pressure from here then takes out the prior day's high. A look above and fail of a prior day's high is a secondary market structure setup. This then triggers a volume profile setup, which is a value area traverse. The volume profile is not shown on here. That then drives a bearish engulfing day. And what happens after we engulf the day? Well, now we are back into this lower box. So we had this lower box range that we had drawn out. We had a breakout, a back test, a resumption higher, and that whole thing gets negated. So these breakout buyers, they're done. Anybody that bought this leg up is now coming under pressure. And this actually, pretty much all of this was just overnight volume. So you've got, sellers from above 730, prior longs, they're selling. We've got all of Wednesday's longs. Now all of a sudden they're stopping out on their positions with high volume from regular trading hours, then dumping on top of extended trading hours buyers, and their stops are triggering. So there was really just no defense in here to prevent this from going from the top of the box all the way down to the bottom of the box. Having been well tested previously, the bottom of the box gave way, and overnight into Friday, we saw some additional blood and an extra few hundred handles for that trade. So again, entering up here, super tight risk. We don't know that all of this is going to manifest, but we do know the possibilities of this playing out. and the potential for a very, very large trade if it does. So we can take this trade, we can take some profits, on the back test of the prior day's high or what have you, hold some runners and just monitor for the development throughout the day. So this is just one example of identifying a key area that has the potential to deliver serious range, and it came 1 week after the same exact setup on ES. If you're interested in learning more, like and subscribe, check out some of my other videos here, and visit farmdcapital.com for some additional free content.